Good morning. We're just waiting for everybody to join. I'll give it a few minutes. Waiting to see who else might join here. We have a few more coming in. Okay, well, I think we got who we got on the call. Thank you for joining us this morning to the Why Carbon Markets Matter webinar. This is my first webinar in my life, so please bear with me as I'm learning how Teams works on webinars and all that. But I think we got it worked out. So welcome to the talk today. I really appreciate you joining me. I just got back from the Bakken last night, and it became really apparent working up there that this is an even important matter than I thought. There was a lot of venting and flaring going on up there, and a lot of great oil production, but they're pipeline constrained. So it's interesting that we're talking about this in light of my recent trip to the Bakken. And then next week, I'll be down in Midland talking with operators about this same topic, as well as compliance related topics. So it's great to see a lot of familiar faces out there and some not so familiar. So thank you for joining me today. We'll get right into it. With that, the title is Why Carbon Markets Matter. And really what we're focused on today is orphan wells and marginal wells. In the US, there's 310 to 800,000 undocumented wells. That's from the Interstate Oil and Gas Compact Commission. A lot of folks think there's many, many more than that. In fact, some people think there's upwards of 3 million. And that gives you an idea of the size of the problem that we're dealing with here. There's just a lot of wells, and it costs up to $100,000 to plug some of these wells. Some of those smaller, shallower wells, older wells, are much cheaper to plug, in the $10,000 to $40,000 range. But regardless, if you multiply the number of orphan wells by the cost per plugging, it's a staggering amount of funds that's needed to clean up these old sites. So the liabilities really do outpace the funds. And the point of this talk today is how can the voluntary carbon market play a role in helping to solve this environmental problem? As well as there's co-benefits from well plugging that aids communities, ecosystems, and they add additional benefits. So with that, we'll move on to the next slide. There is a funding gap. The state and federal government tends to fund most of the orphan well plugging, or almost all of it. The federal dollars are very limited to those federal leases, and the Inflation Reduction Act provided some money, which has now been pulled back largely to the states to plug more wells. Each state manages their orphan well inventory in a responsible way, but they just don't have enough money to plug all these orphan wells. A lot of these are very old, and they were orphaned long ago. And there's just not enough funding from the state governments to deal with the issue. And then there's the marginal wells. These are wells that are low producers. Some folks call them stripper wells. And the stripper wells are the next orphan wells. And how is that? What happens there? Well, I'll explain it. That the large companies sometimes sell off their lower producing assets to smaller companies. These smaller companies, in good faith, buy these assets and are producing those. And then oil and gas prices fluctuate dramatically. So when you purchase an asset, it could have a great return on investment opportunity. And then the oil price drops to a point where the return on investment is not there anymore. So at that point, these operators become in a difficult financial position, and they don't have the financial wherewithal to manage the inventory they have. And in those cases, then they become orphan when those companies go bankrupt and can't manage those properties. So in that case, there's a socioeconomic co-benefits lost due to this funding gap. Really, we're looking at air emissions, methane emissions, VOC emissions from these wells that are impacting communities, impacting environments, so on. Carbon credits are an interesting vehicle to close this gap. Really, the capital markets are the fastest way to solve this issue. If we can get carbon credits from orphan and marginal wells that are legitimate and saleable on the international and national market, it would provide a funding level that could solve this problem relatively quickly compared to waiting for state government agencies and federal agencies to come up with a solution. At this point, there is no solution from a funding perspective with state and federal governments. So really, it's a market-based, scalable capital solution. There is a lot of these wells that are emitting and some are not emitting. And so the idea here is, could we leverage those that are emitting in the voluntary carbon market to help plug those wells that are maybe not emitting but are still an environmental problem from a surface impact standpoint, from a leaking oil standpoint, leaking water standpoint. And really, we're going to discuss next how these carbon credits could align with the IC Core Principles. The IC Core Principles are key to selling these credits on an international stage. And really, they define how the Core Carbon Principles should be applied, and basically provide the buyers with some assurance that they're buying carbon credits that are legitimate, that help them offset their own emissions. And why, what I'm really here to talk about is why orphan and marginal well carbon credits can meet these IC Core Carbon Principles. They have effective governance in effect. We insure the carbon credits from the well plugging. All well plugging operations have insurance requirements. And that's very important to understand, is when you bolster these carbon credits with an insurance aspect, it really helps the buyer understand that there's long-term benefit. We track the carbon credits from well plugging. We measure the emissions before they're plugged. We measure the emissions after they're plugged and subtract the two to understand how much emissions are reduced through the operation. And that really helps the buyer understand exactly what they're buying. And the measurement, I'll get into that a little bit, is very precise. We use high flow samplers and other devices. I see Michael Beck's on with VentMedic, which is another type of instrument that could be used to measure the emissions before and after. And then we use blockchain technology to upload that data in a very transparent manner and get it into the cloud. And the data is supported through calibration, through state-of-the-art instrumentation, and finally, then the reservoir engineering comes into place. A lot of these wells are emitting, but you don't know how long they're going to emit for. So the reservoir engineering models come into place to help buyers understand how long the emissions may be occurring for, what is the crediting period that could be applied to these. And finally, there's multiple layers of third-party verification and validation when carbon credits are generated. There's quite a few registries out there right now working on methodologies. Some of you may know that there's ACR's developed a method, and they were the first out of the gate. They've since put that method on pause and are relooking at the method to improve and bolster it. There's Carbon Path, has been around for a few years now, and they do a more reserves-based approach. And then there's new startups that are working on these as well. One Shot Earth comes to mind, Climate Wells. All these folks are developing methodologies that are useful, but there's a lot of methodologies out there right now, so no one's defined exactly what is the best method to use. But the bottom line is these credits can have proven additionality. There's nobody going to plug these wells if we don't. And so the voluntary markets could provide a level of funding that does prove the additionality, because there is no solvent operator. These wells are going to emit for a very, very long time. Secondly, we can enhance the plug design. At Sendero, we do exceptional efforts to go to great lengths to isolate aquifers, to put plugs in place that are going to last for many, many decades. And we also purport are supporting long-term monitoring for these sites through a number of different methods. We're developing a proprietary approach right now for long-term monitoring that should be announced in the next few months. And finally, there's a blockchain record that lasts for decades. The emissions data, the reservoir data is really important to put in the record, as well as the co-benefits that are created from the plugging operation. So really the approach and aspect of plugging orphan wells does have proven additionality, and it's permanent. These wells are plugged with cement. They're plugged with bridge plugs. They're plugged with a lot of engineering knowledge and understanding that goes into this to provide a permanent plug so that these wells will not emit in the future. The quantification is really important to this aspect, because that's how you quantify a number of carbon credits that will be issued under these methodologies. But the way we use this is we use high flow samplers, we use RMLDs, we use other equipment, tunable diode laser systems, to develop second by second methane data from these wells. Before plugging, we measure both short-term and long-term to understand the characteristics of each well. Each well is a little bit different. And so you have to sometimes measure longer than you otherwise would. And then we finally apply an SEC style reserves accounting to that measurement data. So the measurement data goes to the cloud, and then it immediately goes to a third party for Sendero, where we have it audited, and there's zero extrapolation. So buyers of these carbon credits can understand that they're real, they're based on data, and they're based on unbiased data, without estimating what the emissions are. Some of the other voluntary carbon credits on the market, such as nature-based credits, have a little bit less ability to directly measure their emission reduction. So I feel that the orphan well methodologies really have the ability to be based in science and measurement that could bolster and actually demonstrate the additionality in a very real way. Secondly, there's no double counting. A lot of folks worry that you're going to plug a well, and who gets those credits, and will they be issued multiple times under multiple methods, and could these reservoirs be tapped again in the future? Well, there's mineral rights law, which guides oil and gas development in the United States. And this mineral rights law basically defines who owns those minerals, how they allocated to each owner, and when you permanently reduce that emission or plug that well, those mineral rights become locked up. And so in order to redevelop that reservoir or recomplete that formation, you would have to go in and get permits. This would show up in multiple different ways. So there's no way to double count, and they're legally enforced. This has decades and decades of history of legal precedents. Finally, there's buffer pools and reservoir monitoring. One of the methodologies, Carbon Path, and I think others, provide a buffer pool, which means there's a number of carbon credits generated from the reserves-based approach, and they set aside some of those credits to make sure that if anybody does try to come in and recomplete in that same area, there's plenty of credits to credit back to ensure that we're not double counting and that there's no issue with redevelopment. Finally, there's an insurance overlay that Sendero is putting in place. Not only do we ensure our plugging operation and the permanence of the plugs, but we also ensure the validity of the carbon credits and ensure that they're not double counted. Sendero Well Services provides best-in-class plugging. We do multi-plug cast iron bridge design. We match our cement chemistry to the geology. This is important to ensure that the cement doesn't degrade over time and cause that well to leak. We also have instituted rig-based live monitoring. So any buyer of a potential carbon credit can actually physically witness the plugging. They can witness where the plugs were set, how they were set. They can see the rheology of the cement in real time. And so we've tried to provide a lot of transparency around our well plugging operations and enhance the transparency for potential buyers. So one well could equal, X times CO2 equivalent avoided. But there's so much benefit from bundling the wells. So what I mean by that is if you have one well that is emitting a lot and 3 other wells next door that are not emitting a lot, the carbon credits have the potential to allow you to plug the other wells that are not leaking as much, may not be economic unless carbon credits are issued. And when you bundle them together, you can plug multiple wells using the dollars from the one higher emitting well. And so that's really important from a co-benefit standpoint. A lot of the other methodologies, nature-based credits, don't allow this amount of co-benefit from plugging other wells. So the credits may outperform many other offsets. If you're out there and you're trying to offset your emissions, these are very credible, science-based super emitter reduction projects. What the markets need to know, really, we're in the state now of developing the market. There's a lot of methodologies out there I mentioned, but we're all guessing. The buyers that really have to define the standards. So I've been working hard to get with buyers, get with crediting agencies to understand really what is important from a buyer's perspective, and how could we put orphan wells into the same frame as nature-based credits for providing a legitimate offset to these companies. And so it's really a call today for us to talk to buyers to understand what they need to get comfortable with purchasing these carbon credits. Secondly, that we need to harmonize the methodologies. There's so many methodologies out there that are all over the map. It's confusing the buyers. We have Carbon Path. We have different methodologies on One Shot Earth now being developed with trade water and climate wells. And these are all great things and positives, but I think that the harmonization and understanding what the most important aspects to capture, how to measure appropriately, when to measure, for how long to measure, and then finally, secondly, thinking about the reservoir. How do you characterize the reservoir? How do you put the reservoir modeling into the methodology so that these can be generally considered legitimate? Right now, the buyers don't know which methodology is accurate. And so it's important for us to continue to work on these methodologies. A lot of great work is being done. I commend all of you that are working on different methodologies, and hope that we can come to a point where the crediting agencies, the rating agencies can really develop a backing behind these credits and side with certain methodologies, and then other methodologies can be developed to ensure that these are consistent and legitimate and verifiable. And Thirdly, there's early adopters can gain a cost advantage. Early adopters are those that are buying into the market early. So right now, the carbon credit markets are seeing dramatic increase in costs of carbon credits. And this is because nature-based carbon credits are expensive. They're difficult. They're tough to measure. They're great credits, but I think there's a place for orphan well credits and marginal well credits as well. And they may be able to be procured at a much lower dollar amount than some of the nature-based credits, providing an advantage to those that are early adopters. So we really want the buyers to dive into this and understand that they could help us adjust the methodologies to ensure that they do not have any criticism about buying those credits at a later date. I went into a little bit about our best practices, but we really go above and beyond on our well plugging at Sendero. We ensure all aquifers are protected. The cement class type is carefully selected for the well depth and formation conditions. We're adding monitoring to our P&A rig to ensure that all critical parameters are monitored. And this allows third parties to come in and really understand what we're doing, how we're doing it. And then they tie that to the blockchain records. So videos, physical records of different parameters during the plugging operation actually go into the record to bolster the carbon credits. And then we take the best practices from each state to create a best in class product. There's some states that don't have as much regulation as others. There's other states that have very strict regulations on plugging. We take the best and apply it to all of our wells so that we can ensure permanent plugging. Secondly, there's high quality measurement. The direct measurement method techniques that we use are based upon US EPA measurement methods. These go way back in history, dating back to the 70s and 80s with the reference methods. My background's in reference method testing, so I've applied a lot of the calibration techniques, quality assurance matters, and other aspects of US EPA reference method measurement to the work that we do. And there's several instruments out there that are very good at this. The high flow sampler is one we use. There's others being developed and that actually can do the similar type of thing, both long-term and short-term. And these data are recorded second by second and then put straight to the cloud. So the credits can be tokenized and create a blockchain record based on direct measurement methods. Finally, there's post-plugging monitoring. Many of the methodologies require you to come back a year, come back 2 years, maybe 5 years. But is that enough? Is there more of a need to do continuous monitoring? I don't have the answer to that today, but I think it's important for buyers to weigh in on what they think. Do they believe that second by second monitoring is required after the well's plugged? Or do they believe a spot check is sufficient? I'm not here to say neither here nor there. I think it's up to the buyers to define what the post-plugging monitoring should be. And I think it also is based on where that well is. If it's near a community, near an area that is a sensitive ecosystem or a sensitive environment, then perhaps more additional monitoring is warranted. Sendero, we do a lot of different things in Sendero. One of the biggest aspects we do is just environmental services. We provide OGI camera inspection services, LDARs, programs, we audit, we do Quad OB compliance. I won't get into all the environmental services, but we're a full service environmental company that provides oil and gas service, provides environmental services to the oil and gas sector. We're also really focused on methane measurement. We have a test fan that you'll see at the end of the slides that we've set up to do a methane measurement. We do carbon advisory services as well. So we look at companies' asset retirement obligation fund, help them think about the voluntary carbon markets, how they could leverage the voluntary carbon markets to plug more of their wells that are marginal or non-economic. And that's really important for a lot of our customers and helping them manage their long-term liabilities as an oil and gas company. Finally, we do emission reduction projects. We come in and are looking at your site emissions and can develop reduction projects, as well as do the reporting required under Quad OB, Subpart W, and other reporting mechanisms. So the key takeaways here today that I'd like you to think about is the voluntary carbon credits have potential to offset more carbon more quickly than any other carbon project. A single well can offset 100,000 tons per year very easily of methane, which equates to a tremendous amount of CO2 equivalent. There's co-benefits from plugging. Not only do you get the well plugged, but you return that land to the landowner. It could be used for crops, could be used back into a sensitive ecosystem, such that the reclaim returns that ground to its native state and allows the rancher, the farmer, the landowner, whoever that may be, to use that land for other purposes or preserve it for conservation. The well plugging credits have the most integrity of any credits because they're directly measured. So when you think about the dollars that are tied to carbon credits, these are tied to a blockchain record that it ties back to a second by second methane monitoring data, such that there is no question at the end of the day of how much methane was reduced. And this is documented through science. There's best in class standards. And we need to apply these to the registries and methodologies such that these are defensible. If we develop a methodology that is not defensible or can be questioned from a science perspective, I think that provides buyers with the hesitancy to buy into the market. And that's really important. So as we work through these different methodologies, work across the registries and work with the validators, we need to make sure that we have the best science applied to each individual project. Finally, we need buyers to help define these standards. We're guessing right now. All the methodologies developed are developed in good faith, and they're all really good. But the buyers currently aren't buying these credits. We have a lot of credits on the market. Some have been sold in pockets here and there, and that's fantastic. But we need more buyers to understand the validity of these credits and how they can help them offset their emissions. I'd like to thank you for your time today. I'm open for questions if you want to put them in the chat. Be glad to help in any way. So you have my contact information here. I'll give it a few minutes to see if anybody has any questions. Okay. Thank you for your comment, Michael. Appreciate it. I understand the market's early. We all do. We're all working through this. I think it's an important market to consider going forward, and we hope it flourishes in the near future. I see Chiron is typing. Well, with that, I don't see any other questions or comments, so I'll just end the event, but please feel free to reach out. My email's there. Be happy to talk with each of you. individually if you'd like to discuss this more. And thank you. All right. Have a great day.